Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips, and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Recording in progress.
Hey guys, welcome everybody. Good afternoon and thanks for joining. It's 11 a.m. Eastern. It is Tuesday, August 22nd. I appreciate everyone for joining. Thank you everyone on Zoom. Thank you, Vic. Dennis, welcome. Ahmed, Kim, everybody. Wenzo, Andronic, welcome. Ian, thank you. Good afternoon, Lady Stone, and everybody else. Thank you guys all for joining. Everyone on YouTube, appreciate you guys as well. Thank you guys for joining. Okay, so what we're going to do is we're going to go for about 90 minutes, maximum 2 hours on today's call, and it's post-New York, so we've already gone through London. Shahab kind of navigated that session. Dave went through New York, and we're going to do some analysis in post-New York now, and I hope everyone's having a great day. And ready to get back into these markets and watch what's going on. As I always say, it's probably going to get redundant. If you guys have already done well today, okay, some of you guys already by this time of the day, 11 noon, 1 p.m., some traders are going to hit their daily goal. Okay, so some traders are trading from London, some traders are trading pre-New York, some traders are trading Wall Street. At this time, some traders have already hit their daily goal, so you don't even need to be trading this hours of the day. But so, as I always say, you guys have to manage your own account. You guys have to be basically your own accountant to your account, and you guys see how you're doing. If you've already exceeded 0.5%, 1%, maybe you're at 1.5%. If you want to continue to trade, make sure you lock in some profit so you don't give that back to the market if you trade later at these times, or if you go into power hour and things like that. You want to kind of get in the habit to hit your daily goal or come close to it and walk away from the markets, and try and get in the habit of learning good behavior to do this every single day. And then you're going to start to see your account compounding and your confidence, not just financially. Okay, we trade for financials, obviously, but your confidence as a trader will start to compound. And once you start to get confident in these markets and you start to understand and trust your analysis, then trading will become much more natural and easier over time. So I'm not going to say trading will be easy, but you can start to make it feel more easy, where you're at ease in the market, where you're controlling your impulse urges, where you're getting more disciplined. You're starting to learn more about risk management and how much you can allocate to a day of trading, how much you can allocate to individual trades, and then you won't be panicking when you're in trades, and then you can start to really learn how the markets operate. So I hope everyone's having a great day. Again, I don't know how everybody's doing. I wish I did know how everybody was doing here. So you need to be in charge of that, okay? What we're going to do is we're going to get started with gold today. No, we're going to do something different. I had a few messages about some traders are already in gold. They're buying off the bottom. There's like this double bottom. So I'm just going to kind of break this down. We have gold over here on Bookmap. And then I'm going to get into the indices, and we'll look at US 30 and Nasdaq. Okay, so if everyone on YouTube, there's not a lot of you guys here, but if you guys get value out of our channel, please like, subscribe, and help grow the channel organically. So I'm going to do something different. This is like a zoom out approach to top down. I show you different ways of how to do a top down. You can start off with the daily, you can go down to the 4 hour or the 1 hour, and then you can ultimately go down to the 5 or 15 minutes. We're getting a big breakout right now on gold. You can see that big transaction that just occurred right now. So like this style of trading, there is levels that you can see no problem. Like right over here, we can see that there is a resistance up there, okay? And you can bring that across with a red zone or whichever color. Some of you guys use a neutral zone, some of you guys use blue, some of you guys use orange. It doesn't matter, okay? Again, it doesn't matter the color. Whatever just makes sense to you. So you can see today, like we came up there at 6 o'clock, 6 a.m., 6:20 to be exact. We came up there almost at 19:05, and then it started to get rejected. Areas what we have, we sent out a signal today, a gold sell at, I can get the approximate time over here. We'll go to show you like how these signals work and how to read these things, and how much of a stop loss to use and things like that. So we're going to get a little bit of an education session here. So here's, let's go to commodities over here. Okay, so here's how gold looks now if in the sell situation. But let's start to see when it came out. So over here, gold sell, okay, 7:20 a.m. Eastern. Entry, sell any below 1902. Again, don't just hit the sell button. Kind of confirm, do some observation. TP suggested, okay, in 1892. You guys can exit whenever you feel like exiting, and a suggested stop loss 1907. So 1902, let's go back to the charts, around 7:20 a.m. So here's 7:20 right around here. So you can start to see a lot of this consolidation here inside here, this area, okay, just all of that consolidation right through there. So this is, again, difficult to trade in here. So you're starting to wait for more 8 a.m., maybe leading into COMEX to start to get some more volatility into the market. And then when you look at other things, you have, as the market is approaching making one high, a new higher high, and 3 higher highs, okay, you can start to see the market is pushing up. And what is going on with our RSI indicator? So it is overbought up here, it's overbought there, it's overbought there, and it's overbought there 3 times. So it's kind of like a hidden divergence. We can see that the RSI is not sloping down while this is going up. So there is this type of divergence as well. It's kind of like equal highs, where the strength comes up to this area 72, 73, and then it pushes down, but the price action is going back up. So that's divergence. And then it comes back into this area again, 72, 73 in here approximately, and the market just pushes down a little bit, but then higher low, and then it breaks out for a new high. So the third top now, and remember, markets move in threes. So if you get like triple tops, triple bottoms, 3-bar plays like candle, it's the market likes to move in patterns of three, if you start to understand what that analogy means. But right here, kind of 3 times we come up into this strength and it's not really breaking any higher, and so that is a hidden divergence, and then we start to flag and then things break down below 1902. So our signal that we sent out below 1902, anywhere, where's 1902 on this chart? Right here, 1902. And then you can start to see, okay, you can wait for a body to close. There's one that comes up about 50% of the body, then starts to break. If you didn't get in there, there's another opportunity where it comes up and gets rejected. Multiple opportunities to maybe look for sell positions below 1902. So if you miss the first move, there could always be, I'm not saying just this example, but I'm saying trading throughout the day, if you miss an opportunity, there might be another opportunity, because 1902 is maybe a static zone. So maybe at some point, like right now, it could come right back up. Like we're at 1898 right now. 1902 again could be a static area of supply where gold could very well come back up to like 1902 and use this again as resistance or supply, and then push right back down. That could happen. So that's why I'm trying to teach this, how these static zones work. So if you took that, now we have levels to the left. Okay, so just using this type of approach, what we're doing here, this area in the market used to be resistance, resistance. If you brought it across here, that big body green candle closed above. Then you could have flipped this zone green and then caught that little move. And this started this bullish momentum when it came back. So if you missed the first initial buy entry right there, the market pushed up and it rotated right back down, where it gave you another attempt to maybe possibly buy and then catch that leg going up. So if we were to extend this zone where it was resistance right here, resistance right here, resistance right here, it turned into support right here with the volume. The only thing that moves is the volume, which is variable. So it uses this zone as a static zone. It broke above it. So then what we would have to do is flip this zone green. Okay, just, you don't need to flip the color of the zones. It's whatever. Some traders just use a neutral zone just to identify zones, and they know if the volume is above, then it should act as support. If the volume is below, it should act as a resistance. Okay, I just do the color scheme to help new traders understand what is resistance, what is support. So with this zone, you can bring it across. Okay, so yes, it did come all the way down right into the zone, and then you start to see how it trades in here. Red, green, red, green, red, green, red. So that's like a little flag pattern at this specific area in the market. And it ended up pushing down, going into Wall Street, 9 o'clock, 9:30, and drop all the way down to where's another specific zone in the market. If we're looking over here, again, looking at the left can tell you a lot about the price action. Over here, okay, we had, where did we have? We had resistance right there, turn to support right there. So it closed above, push off this. Every time it comes back down into the green box, it pushes off of it. Then we start to get some volatility, okay? Some big moves. Again, look at the time when you start to see volatility happen. 8:20, Comex. This was on Friday. So you start to see where the bigger moves are in the markets. You start to see where more of the consolidation is in the markets. If you bring this zone across, it's red now. So the market closed below, come back up, red, push down, come back up, red, push all the way back down. So if I continue extending this across, here we closed above it. There's your M pattern, breakdown, use this zone, get rejected, the consolidation again. So I'm not changing the zone, I'm just bringing it across all the way over here. And today it broke right below it, took out the lows and came right back in. So this is where we are trading right now. So if you happen to have taken that sell with the SST gold signal it's a beautiful move. Okay, from 1902 to the first zone, okay, 50 pips. Some traders lock in at 50 and they're happy with that. But if you continued maybe to watch the momentum or add at that zone, it pushed all the way down for approximately 120, 130 pip move. Now, there's a little bit of a retracement. So bring this zone again right into where we're trading. What color am I going to make the zone? This bearish candle just closed below it, so I'm going to make it red. Okay, so we've got our zones now established. You can now stretch these across as far as you want. Okay, you have your upper resting supply up here. You have your immediate zone that is active right now, like what we can see in the order book. We've got the orders, and then you got some resting support down here. If gold ever comes back to 1890, maybe it might bounce through here. But then you have now, you have the resistance point of this double bottom. Okay, so it's got a neckline. Okay, we can see right there it got rejected, right there it got rejected, and right there it's using it as support. So if we kind of want to now really kind of make the zone a little bit tighter, okay, right here we had the move come down right there. It came back up, one leg back up, found the neckline, found the resistance. Then it got rejected and it came back down to the double bottom with a higher low from the previous low. So it's kind of a double bottom W, and now we closed above. Okay, so we got our first body that closed above the zone right there, perfect, and then it gave us a retest. So with all of the other rules and things we teach at SST, it opened red. We identify 50% of the previous candle. Like, we do this daily. This is how I trade. But it came right into the heart of that zone, 50% of that bullish candle that had that nice double bottom breakout, and it respected it, and you could have bought this candle, buy, and you could have placed your stop loss either below this single bar. That's a little tight stop loss. Some traders do that. You could place your stop loss 50% of this previous bar. Some traders will place their stop loss below the entire structure down here. That's all depends on your own risk management, how much you're willing to risk. And what happened? It came right up to the previous zone. Okay, here it was red, 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 turned here, respect, green, green, hold. Here we had that mixed reaction here. When 830 opened and COMEX, you got red, green, red, green, red, green, red. But you can see the lower high, lower high, lower high, and all the lower lows continue to push down. So it's just a small bearish flag that happened in here and continue push down. So we're still using this zone. So if you got into that buy, just doing zone to zone trading, like from here approximately, if you buy, it came right into that red zone for 20 to up to 25 pips. Okay, so it came in there. And sometimes when you go into profit 10, 20, 25 pips as an intraday trader or a scalper, then maybe at these zones, what these zones tell you is maybe it gives you a heads up that a decision needs to be made. Okay, or just consider a decision. The decisions that can be made are multiple decisions. You could close full profit and get 25 pips out of the market and walk away. Okay, that's decision number one. Not everybody wants to do that. So then what is decision number two? Decision number two is maybe scale out a little bit of profit. You don't need to close your entire trade, but you could close out 50% of your trade. You could close out 60, 70, 80, 90%, whatever you like. Just reward yourself a little bit. The trade went from one zone to the next zone. 25 pips is a pretty good trade with minimal drawdown. You could go to a break even. And option two is either take some money out of the market. If you don't do that, then your only other option is basically to go to a break even. If your stop loss was below this body, if your stop loss was 50% of this body, or if your stop loss was all the way down here, then you want to protect your capital when you go into profit. So go to a break even, option three, and see if this continues to run and move more higher than 25 pips and maybe break out halfway into here at 1900, that psychological area. Like, I don't even need to draw a block at 1900. It's just a psychological area in the market. And if I look to the left to confirm my bias, I'm looking right here. Here was resistance, where? At 1900. It turned to support at 1900. It turned over here into resistance at 1900. Turned to support at 1900. If I bring this box across right into 1900, that's my next zone that it could move up to before it comes all the way up to this upper one. So this is not green. I'm going to make this one red, because the volume is down here. So that is resting supply in that zone above us. Okay, so we came up here, and what happened? It got rejected and it pushed down. Why? Because this is a counter buy. This is a counter. Okay, the buyers are trying. They're trying. Gold dropped quite a bit from 19. Look at the high, 1904. It dropped all the way down to 1890. So that's a big drop. So the buyers are buying, but they are countering the overall trend that's pushing down. On the higher time frame, starting all the way over here from 6 a.m. Eastern, there's a lot of selling pressure. So buyers are buying. There's still selling pressure here that push it down. But the buyers now are buying at a higher, the bids, they're increasing the bids higher. So they're making a supporting block right here and holding this area. So there is a little bit of respect on the buyers at this time, 10 o'clock, coming in the market and making a new high, coming up all the way up to the next zone. But then there is still a little bit of selling pressure still in the market. So it's pushing right back down. Now we're going to possibly trade in between these zones now. Here's the volume right up here. If the buyers can maybe come down here and hold this block and bring it right back again, then we're looking to see if we can possibly break back out for a new high to come up here and maybe close and then retest this zone where we can flip it green, and then it develops more bids, and then we're shooting up for 1900. And when we get up there, again, it's decision time. We need to make a decision up here. Those 3 decisions that I told you. It could, with momentum, it could break right out of here and come right into there. That's a possibility. But right now, the sellers are still in control, still pushing this move down, but we do have buyers present in the market. Where are the buyers? You can draw like a trend line right now. From here to there, okay, that's where they respected that area. If we now bring this trend line up, you can see maybe if it still holds this zone, the buyers will still hold the trend. If it breaks below here, like later this afternoon, if it breaks below here, break the trend, break the supporting zone, it might come down here. Then what are we going to do? It might come up for a retest. Buyers might be waiting with pending orders right in here. Come up, and then that's where we're flipping that green one red to see if it's offers, and then if it gets rejected, then maybe sellers will be in control again and push gold all the way back down to 1890. So if you want to trade in between these zones, you absolutely can. You can use these as static zones all day. What you could also do is, if you want to add a Fibonacci from today's like high up here, 620, what I'm looking at right now on the chart, put your Fibonacci tool from the high to today's low right there. Okay, all I did was just grab my Fibonacci tool from the high to today's low right there. Okay, just what I'm seeing from now, from 6 a.m. to this low. You see where our golden line is, okay? So now we're using our fibs to complement our analysis. How does everything line up? So 0.5, right now, our psychological halfway point is right in this red box right now where we're transacting. Above us, if it does break out, there's our 618, okay? If it still stays below this area, it's still considered to be bearish. If we come up to the 618 and then it pushes down, it's still considered bearish. But if volume now, green volume, starts to close above 0.5 and we start pushing up and we close above 618, there's a high probability that we're going to come up to 786, but there's going to be a little bit of resistance encountered here at 1900 and then our bigger area. So right now, what happened? From the bottom, it came up, we came all the way right back down, we closed above 236, so we're moving away from the 236. We came up to the 382, we held it, supported it, came up, But now, has it came back down to the 382? No. So there's a higher low being formed in the market right here at 1896 on gold. Okay, so what I like to do is I like to use just like single lines like here when I'm trading. So you can see that they're equal lows right here. This area exactly. This previous low is holding. It came right back down to the equal low. It didn't break. Okay, so buyers are holding this position. It's above 50% of this bullish candle, still holding. And now we're coming right back up to test, to breakout of all of these offers in the current order book above us. Here's the heat up here on the futures. It's up here. You see where that heat is? It's approximately where the 618 golden line is, where that heat is showing up there. That's approximately where it is, at that 618. So if we can break out maybe a little bit of an impulse break to that 618, and we'll see what happens in there. There's going to be a lot of transactions in this area in the market. This could be developing maybe a double top. See how it came up? Now we found our bottom neckline right there, the double bottom equal lows, and it's coming right back up now. So let's say it breaks out and comes up there. It might be a higher high breakout, but then hit those pending orders and there's a lot of offers, and then it comes back down into here and try to break again that neckline. Maybe it doesn't break, but then it comes back up like this and then it breaks down. And then what pattern is that? That's your head and shoulder. Like here's your left shoulder, there's your head that breaks out, your highest point where all of the offers are, and a lot of supply pushes the move back down. But then there's going to be buyers waiting in here, and then they bring it up, but then these offers get lowered down to the right shoulder, and then that's that move pushing down. Okay, it could also be maybe not a head and shoulder, maybe it's just an M double top where the market comes up. There's our neckline, it's coming up again, lower high. Maybe the sellers start to push it down, and then it pushes below there, and then we get a move like this, and it's continuing selling pressure this afternoon. But right now we have to respect the buyers. They are moving. It's kind of like in a football game where you move the chains. You get a first down. You know, when it's like 1st and 10, you try, and then you get like 2nd and 3rd, and then you complete it, and then you move the chains in a football game. The buyers are moving it downfield right now, but the sellers still are winning the game. Okay, but the buyers are slowly trying to get it up there. So this is where markets now consolidate. Okay, so you can start to see our transactions, how they're consolidating in the book right now. There was a nice move that broke out of here. You can see where the buyers were in full control, and now we're starting to get mixed reaction in the market, and it's consolidating. So what I would do is, I don't know if traders trade off of the Fibonacci. Okay, if you do, maybe wait for a reaction here at the 382. Maybe wait for some type of reaction to happen at 618. But I like to trade, like I like to scalp the markets a little bit more aggressively. So if I'm looking for a sell, I'm looking for a sell like below the neckline, or I'm looking to take a sell in this red box, or if it breaks out to the 618, I'm looking to maybe put a small test sell in the market to see how everything is moving. If everything starts to move in my bias, then with momentum I start to add more positions in the market. But right now you might get caught trading this stuff because it could consolidate. Like let's say for example you start buying, it might go down, and then if you sell, it might come down here and then go right back up, and then you're going to get frustrated trading this type of stuff. So just be careful. It's again, if you want to kind of trap what's going on right now, you can trap where the volume is currently in the market right there. And if you're smart, everybody's smart here. We know that gold is not just going to trade in this entire zone the rest of the day, or going into the Asian session, or going into London tomorrow. There's gonna be a possible move on gold. The 3 moves again with any security is it can trade in here and just continue trading in here. If you want to scalp this area or trade this area, what I would do is I measure from the top to the bottom, and then I know it's 18 pips. 18. That's the full zone, but there's not 18 pips in there, because when you trade either with a prop firm, or you trade with a you trade with a broker, unless you're doing futures. But I'm saying majority of people that are trading in here have spreads and slippage and things like that. So take whatever your spread is, maybe it's 1, 1.5, and subtract that from 18, 15 pips maybe, and then if you take a trade, you might get slipped up 1 pip or 2 pips. So let's say if you're trading in here, you have to understand that maybe this is 10, 15 pip zone, where you think you got 18 pips, but you don't. You got 15 at the end of the day, because there's got to be, you got to pay your broker as well for allowing you to trade. So this is where you have to think, is this an area that I like to trade? Because if you're trading in this area, 10 to 15 pips is the average trade in there. You're not looking for 40 pips, 50 pips, because sometimes it might just trade in here for a little bit where it's consolidating. If you don't feel comfortable trading in there, then the other option is it could possibly break out of here, use this, and come up to like the next zone. But there's going to be a big reaction at this 618 here. And then the other is, if you're not trading in the zone, maybe the sellers are going to take control and then push the move down there. Those are our 3 moves. Any security you trade, any time frame you trade, that's how the markets move. It's just either sideways, up, or down. It's just, we want to be on the side that has the higher probability of where it could go. So right now looking at the bottom structure, did the sellers break the low? No. The buyers, we have to give them respect. They held this area 2 times and they're equal. So the bids are really strong at that area. They didn't break the trend. And now it's coming right back up. So those 2 tweezer highs, I don't know if you guys can see those little wicks right there, but they're pretty equal. And now look at a 3rd attempt. Exactly right at this area. See where I place that red line? That wick, and we just came up there again. So this might be 3 equal highs. Let's see if the bulls on gold right now, the buyers, can break it out of there. And when it breaks out, it switches up the order book. It switches up the order flow in the market. The entire liquidity changes, because think about it. If it breaks a high and we have nice higher lows on the bottom, then possibly more pending buys will come into the market because they want to be part of this uptrend, and that will change the order flow of offers above us. Offers might start to get pulled out of, because now it sees that the market is trending up. But we could also see maybe more offers populate to push this move down. So this is why it's interesting when you learn about order flow and how to read an order book, how it can help you in your trading. And then if there's specific areas you see where there's big blocks in the market, you kind of focus on those blocks and see, are they coming up? Are they putting the blocks higher to start to respect this move that's happening? So this candle is going to close in 1 minute. And this is the first 5-minute candle of our new 30-minute frame. So we are currently making that little wick right there created a new higher high. But we do have some resistance over here. Remember in this flag that I was talking about, where it came down red, came back up green, came down red, came up green, went down. So you can start to see that there was resistance in this area. So we are at a critical area on gold right now. Whether you're still in a sell or you're buying, this area is very critical because it's 0.5 and the 618, and we're right in between it. So this is where the markets start to really fight in this area, just like it did over here. So here you might see who can maybe take control of this move. So it's coming right back up. Nice drop, the signal we sent out, okay? And then the markets are not gonna just drop forever. Okay, there's gonna be a time where the markets catch their breath. And right now gold caught its breath at 1890, and it's coming all the way right back up to maybe that psychological area of 1900. But let's see if sellers can maybe push this move down. Now when you're watching individual bars, okay, so this big bar, so any pullback now, what I look at is about 50%. I want to see, can 50% of this volume in this candle hold this move? Like right here, I bring this red line up to 50% right of the body, and now we're kind of above this red box. So I flip the color of this zone. I make it green to kind of imitate what the market, what the current order book could look like. So you can see that we have all the bids below us. So it's kind of like we're selling into where the bids are. So this is where you have to be careful, because you might be counter trading a current move that's developing bullish right now. So have we touched 50% here? No. So essentially what happened was this candle opened, it could not take out the new high. So it is essentially a lower high between these two candles, and now it's pushing down. So we have selling pressure trying to come down, and when it came down, it stopped right there. So we had a bit of bids right there that pulled the market up, but when it came up, more offers populated, and they pushed it right back down. But have we tested still 50%? Not yet. So we still have to understand that buyers are still holding it right there where my cursor is. And now it just collected a few more bids, and it's coming right back up. So now what we got to do is we got to flip this candle. There's still a lot of red volume. Now it's turning into a pin bar, a bullish pin bar. This could potentially, now we turned into a hammer. So we just filled up with all the bids. Did we break 50%? No. So you can see that we're holding this area, a green block right there, just on this candle. So it's a perfect retest, 50% held. And now we came up, we took out the high. So let's see now if it has momentum in the next few bars to hit that 618 at that 1898.75 on gold. And look to the left, okay? We see 2 times it came up here and got rejected right there. So look at what we're trading right into. That red supply that really pushed the market down today. It didn't allow it to break at 845. It came up real bullish and they pushed it down. Next bar opened and ignited and engulfed that previous green one. Then it came up again strong. And look at what they did. They pushed it down right there. See how we just came right into it right now? Okay, and then they pushed us down. But as we came down, we just picked up a few more bids. So this is an indecision candle. This is like what we call a spin top, 50-50 candle. Like the buyers are pushing it up, the sellers are pushing it down. Now we're coming right back up. So that's why it's important to understand the time frame that you're trading. Watch your how long it is. This is a 5-minute candle. So if you're watching the entire 5-minute candle, you can't make a quick judgment on the first 30 seconds. Sometimes it does go in your favor, but if you're watching for the full 5 minutes, this is a 5-minute candle. So we have to wait till this bar closes. There's still another minute and 10 seconds. This can show us who had momentum at open, how it moved in the entire 5 minutes, and who has momentum going into the close of this bar. So that's price action. That's why it's important to learn price action with all of your other trading skills, not just risk management. That is most important, risk management, your psychology. But then once you start to learn how individual bars move, then you can use this type of knowledge with any time frame. This could have been 1 hour candles if you're a 1 hour trader. That could have been this is a 1 hour setup. 1 hour move came down to 50% of the previous 1 hour bar, and now we're pushing right back up. This could have been 1 minute candles, 5 minutes, 30 minutes. It doesn't matter. These could be daily candles. That could have been yesterday's volume, and we closed, and then next day opened, retraced 50%, and now it's breaking again. So it doesn't matter. But you see how we're trying to penetrate through this area, but that's where there was a lot of supply this morning that pushed that big move down. So now the buyers are countering, and now it's breaking possibly up to that 618. So again, let's go through the motions. We just closed near the high. They opened it red, ignited right after. Ask yourself, like, how does that happen? Okay, I always ask myself, if we just pushed all the way up there and just closed right there, should that candle logically not open green and just push? No, because these markets are manipulated. See how they open it ignited red? Like that has to be a reason how that's done. Okay, so even if you're in that buy, I know it's strong, it should have opened green at demand and pushed up, but look at what the markets can do to you. Okay, so they opened it red, bearish, the next 5 minute bar, and come all the way right back down. So you have to go through these motions, when you're in a trade. That's why sometimes for scalpers, we make decisions when candles close, open, where they come up to. So there's no ifs, ands, or buts, or I should have done that, I could have done that, because every situation is different. Every day is different. Every time frame is different. Every candlestick is different. So that's why sometimes you got to kind of make some decisions, how the market is moving. If you're still in the trade, let's look what's going on. So they opened it, ignited red, and it came down. Did it touch this green box? No, it's still holding. Okay, how low did it go to? It's actually technically a higher low from our previous low. So it came down fast. So it came down very aggressive. But when it came down, it met a block of bids at this particular area in the market, and there's still buying pressure. We have now you see the flip. Okay, so we came down, if you're watching, higher low into that block. We picked up the bids, and now we could be squeezing those sellers that with that aggressive sell right when that body opened. Now it could squeeze. We turned into a hammer candle with the higher low. Now we should hit that yellow line. Okay, with all of this momentum, all of that momentum. Like if you see how much did it pick up when this opened and came down there? It picked up 7.5 pips. Okay, so when it comes back up here, it only broke out for 2. It still should technically try and break out for 7.5 pips to the upside. But you can see that there's a lot of supply in the market that is still holding this down. It broke out and now it's coming right back down. So you can see the dogfight in this area, right at this 618, this particular area. So we got to watch again. How will this body close? There's 2 more minutes still left on it. 2 minutes is a long time, but we do have some offers up here. Every move will have supply and demand everywhere, but it's important to know that that higher low is still holding this position. Where it will close is very important too. This was our previous high that took that move down. This is where the buyers are fighting for this position, this 1898 right up here. If it can kind of close above this area, then again, the order book, the current order book is going to change. So this close is really important for the psychology of the market from that previous high. If the buyers cannot close it above 1898.408, then possibly the next candle might be red and come back down to test this area. And this is where, again, we might get some consolidation. The market might trade sideways at this area until it accumulates, and we'll see who accumulates more, the buyers or the sellers. Okay, you see, and there's your 618 of the entire move from this high over here at exactly 6:20 a.m. Eastern, 1904.60, and then that current drop all the way down there at 9:55, right before 10 a.m. at 1898.261, and we're rotating all the way right back up, right up to that 618. So if someone bought this down here, if someone bought down here, you got to start to also make maybe a decision. If you bought all of this move and you're up, you got to maybe decide right here, because this is an important area, not just from price action, but if you use this Fibonacci tool, that's that 618, that golden area where this move could push down. You could get a flood of sellers come in the market and push gold down, back down into here, and then all of a sudden it's coming down. We're testing this green box. If it can't hold here, then the 236. If it can't hold 236, then the bigger green box. So there's always levels. You can use the Fibonacci tool if you like while you're trading, and then see how bars open and close. So who won that battle? It came up, came down, closed right here. So sellers engulfed the majority of that body. Now we opened up green. It came up, tested 50% of the previous red candle, and they're pushing it down, but they have not broke a new lower low yet. Okay, so it's still, these buyers are relentless. They're still holding good support here. Hasn't broke that low, hasn't broke that low. We have not broke 50% of this bullish candle. So here's your flag where it could go green, red, maybe indecision in here, and maybe it could form as a bull flag where it consolidates in here and continues to break out. It could also start to push down here, and sellers will ideally bring it down here, but it's still holding. Okay, always watch the lows and the highs of every single candle you trade, because right there, that is technically a higher low, and now it's pushing to see if it can break this previous high and touch that 618 yellow and maybe break. And if it does, where could we potentially move? Our red zone is above there, but also maybe 50% right there. So I always look at 50%, even just half of the zone, if I was right there. But it also lines up with perfectly half of this big red bar candle that came down. If it breaks 618, might have an impulse right up to here to 1899.416. And if it can break a little higher, yes, then it could get up to that red zone. There's our offers above us. Our bids are building. Nice heat down here at the VWAP. We've got current cumulative volume delta on gold looking really, really good. Okay, a lot of positive, net positive transactions are currently taking this up one more time. So if you're selling, you have to be careful. You're not breaking any structure down here. It's still these three bars, high, 50%. We got a higher low and a higher low. So you're selling against buying pressure currently in the market. Is there any questions on this stuff? Moro also can be a golden cross. Yeah, Moro, I haven't even put on my indicators. So to complement everything, Moro, thanks for reminding me, we've got our zones, we've got Fibonacci to help too as confluence, and if we add a 9 EMA, okay, we are above the 9 EMA. Every time we retrace down, we're holding the 9 EMA. Okay, this green line is our 9 EMA. Let's add the 200. So we're currently developing maybe a possible golden cross. Here was a death cross earlier today at 9 o'clock, where the 9 crossed the 200, and then we had that push down here. This is now where we came all the way down here, and now the 9 is crossing over the 200. So this is a potential golden cross at the 618. We're at a critical area. It's breaking. The buyers are in control right now, but let's see if it can close. It's not just can a move make a higher high and a higher low. It's also important where the bodies close. If this body can close above the 618, it might use the 618 as a support level and maybe continue to push further. There's going to be pullbacks, but as long as it's trending up with higher highs and higher lows, then we're continuing with this bullish momentum. Okay, and maybe, you know what, the markets want to find where the liquidity is, because where the liquidity is, that's where the money is, that's where the auction is. So maybe it wants to move into this high level of liquidity, but we also have liquidity down here. The market may want to come down, pull back down into here to pick up this liquidity in order to break this level. So that's where we get those highs and lows. Depending how it's holding structure, it might support further that gold is bullish, but also where it closes. Okay, we're near the high. We have 40 seconds. This really will be a strong close if it can close above that 618. Then what do we have to do is we got to go through the motions. Remember this area that used to be red over here? We are now maybe closing above it, and we've got to flip it green momentarily, like what we did with this bar. This one is still holding down there, but we got to see what will happen with this one. So it got pushed down. We got to watch where it closes. And 1900 is a beautiful psychological number in the markets. Markets run on these psychological numbers. Okay, so where did we close? It closed right below 618. Flip this red box green, okay, just in case it pulls back. And what type of bar did we open up with? It opened small, tiny retracement, so it's almost technically an ignited candle, but there is still a wick. But now we're trying to take out the high, the previous high. Remember, the shorter the wick, the less travel, the path of least resistance. You know what they say? So if we had a shorter wick with a bullish ignited candle, we pop and we drive. The longer the wick, it takes more momentum to fill that wick and pop. So that is technically, we filled the wick, and now let's see if we can pop up to that red line. The red line is 50% of this bearish candle. If it can continue to break, then 1900 block is waiting right up here. So you see how I'm just flipping the zones? So if you want to sell, you're selling against this green block, you're selling against this big green block. Okay, you're going against the current trend right now. The overall trend, yes, from earlier today is bearish, but you got to respect what the buyers are doing. They're bringing it right back up, and they're bringing it up with higher highs and higher lows, higher highs and higher lows. The depth of market is building for the buy side. We're above the VWAP. That transaction right there, this one, had lots of big volume that caused that big move. So here's where it will get tested. When it comes right back down, you see where the heat is? It's right at that big transaction right there, 1926.4 on the futures. And it could be inside like this big green blocks that we made right here. Okay, so if you're just moving up with the market, this is sometimes how you can do it. Today it's moving really nice. Gold is moving really nice today. There's other days where gold is just moving like this. Okay, so you got to take what the market gives you. Every day is not going to be just a trend come down and a trend go up. There's going to be times where it gets really, really choppy. So on those choppy days, what you need to do is maybe reduce how much you trade, lower your lot sizing so you don't get frustrated or pissed off or do anything silly, and then wait for a nice day that moves like this. And then maybe you can take advantage of that volume. Every single day is not going to trade exactly how an uptrend moves, higher highs and higher lows. It's nice when it does, but we're not always going to get that. We're going to get days that are very, very tough to trade. So those are the days where you have to learn as a trader to maybe lower your risk on those days, maybe not take as many trades, maybe learn how to walk away from the markets. A lot of you guys are learning how to do this. Some of you guys are trading 4, 5, 6, 8 hours a day, and you guys cannot walk away from the market. Some of you guys are now learning this, and you're saying, Ron, ever since I started to walk away from the market, my trading has changed because I know that I can come back later in the afternoon. I know I can come back maybe tomorrow. The markets are going nowhere, guys. They're going nowhere, okay? They're here to stay. You don't need to trade all day, and it's your job just to figure out what is good volume to trade and what is bad volume to trade. And once you understand those concepts, your trading will eventually get better with more practice and more experience. So now it came up to that 618. We're below 50% of that bar that pushed the market down. This was an aggressive bar, okay? Look at it too. Don't just look at 50%. Look at how the bar was formed. How did this open? This opened green. It came up very bullish, and right away the sellers pushed it down. And when it came where it opened, look how the sellers were in control, and they closed it near the low. And again, the next pullback came up here. Did it test 50%? No. Lots of selling pressure. There's the short wick pop, and the drop. So you got to look in the past and how these things are created. That was a very bearish move. Like, they really shut those buyers down. So if you don't respect that volume to the left, then you're going to kind of maybe be guessing where it could go. This was an aggressive move. Just look how it opened. It opened green, came all the way up there, rejected hard, and they pushed it down and they closed it near the low, and the next bar really dropped. So there was a lot of selling pressure in this candle. So that's about roughly approximately 50% of it. If I bring it across, we just traded right into it, and the sellers are pushing it down. Did we close above this 618 right here? So we came impulse above it, we closed right there. We came again, we created a higher high impulse move, and they closed it right down there. So now it might come down to test our blocks down here. This big block right here, it could come down to maybe test the 9 EMA or the 200. They're here, but they're starting to diverge away from each other. The 9 is moving away from the 200, but this is where it might build. If we get more volume, green volume, if we get more buyers bidding it up, we'd like to see it close above 618 in order to take out this block and come up to that next one. But you can see how areas, like as a scalper, for example, if you bought this green candle, some scalpers are trading 1 minute. If we look at the 1 minute, Okay, you can't hold trades forever on the 1 minutes as well. There's got to be some times where maybe, for example, you bought this. Okay, so if you had your chart ready and you had it all set up the way how I had it, now you just watch the volume trade into these levels. So for example, here we had a bullish engulfing 1 minute candle at 11:46 to start the new 15-minute bar, close above here. Your next bar is ignited. Some 1 minute traders will buy this, place their stop loss maybe below these bars, just like as if it's any other time frame. And if you do, then what I normally do is I measure to the top of that next zone, and it's roughly 7.5 pips. Okay, that's the zone. And then you got to again factor in, you got your spread, your everything like that, because you're not maybe going to get 7.5 pips. You're maybe only going to get 4 or 5 out of that move. So, but it did come right up to there. Is that the best area to buy? Probably not, because it's right at this 618. It's going to be a big fight. Maybe you just allow this area to let the market decide what it wants to do here. This could be a very stressful area to trade inside here. The only other thing is if you kind of maybe were a buyer from down here or here or here or here, when it comes up to this area, that's your decision. You need to make a decision up there because it could come down, but if you're still holding, maybe a trailing stop loss. How do you use a trailing stop loss? Okay, so if you get enough cushion, so for example, let's say you bought this leg. As it's coming up and you secure this block, maybe if you were a buyer here, your trailing stop loss now, as it moves away from this block, or even like these Fibonacci levels, if it moves away from here, for example, if you bought here and now it's moving away from the 236, minimum your trailing stop loss should be here. This money should be secured. As it continues to move and hold 382 and push above, maybe take your trailing stop loss. If you were a buyer here, place it right below the 382, like in this block. That's your trailing stop loss. If the market ever comes back down, okay, you're going to get stopped out, but all of this is secured money in your pocket. If it continues now above the 0.5, okay, so if you were a buyer down there, maybe have your trailing stop loss below the 200 EMA and below the 0.5. Yes, you could possibly get stopped out, but it's better to get stopped out and you've secured all of this money in your pocket, because if you don't, what happens if gold breaks and starts to come down here and continues to break down bearish? Then you're giving away your daily wage. It's like going to work all day. You go to work, you work a 8-hour shift, and you go home and you don't get paid for your work. Okay, think about it. So a lot of you guys work, right? You guys work 8 hours at your job, 10 hours, but you get paid every single day for your time and your what you do at work. Traders, we don't get paid for our work, right? We can be in the market and be up with unrealized gains, but until we realize those gains, so you might be trading and holding trades and you're in profit, but you don't do anything, and then all of a sudden it comes down and hits your break even. So you could have been in the market for 2 hours, 4 hours, 6 hours, 8 hours, and now you're not getting paid for your work. Think about you going to work, putting in 8 hours at your job. Maybe some of you guys work physical labor and tough jobs, or shift work and all of that, and you don't get rewarded for your work. That's going to destroy you, right? Yeah. So same thing. Why do we do it as traders? Why do we take this for granted, like we're not going to work, we're not making any money in these markets? So that's why I don't trade with I should have done that, I could have done that. As long as you're securing a certain amount that you're happy with, whether it's 0.5% per day, 1% per day, you are making a daily wage in the markets. You need to respect that, guys. Some of you guys are really negative. I saw someone say, I only got 50 pips out of a trade. You only got 50 pips out of a trade, and you're talking negative about that. Some traders would be grateful to get 50 pips out of a trade. So always look at the positives, guys, of what you could do. If you've secured all of that, okay, then just now you know that's money in the bank. If it stops you out, who cares? Okay, you get stopped out, but you still secured that. And try and look for these. If you can do this, not just today, but tomorrow and the next day. Some days are going to be worse than others. We know that. We're all traders here. Some days are very difficult to trade. Some days we get stopped out. But if you secure money today, maybe you secure a little bit tomorrow, if you get stopped out or you take a loss on Friday, you're still up for the week. And then you move with that momentum into your next week. And maybe you're going to have a good start of the week again. So that's the part of compounding. Compounding your account. Slow growth is the best growth. And over time, you're going to get a snowball effect. Your account is going to start to grow. Yes, we do as traders take losses. I take losses just like you. But with over time of accumulating, compounding an account, your losses will not be as significant. So if you've been compounding 1% per day, some of us in the group have done it here. They're up 20, 30%, 40% over a 3-month span. So even if they take a 1%, 0.5% loss today, they're still up 30%. And that 30 can continue to turn maybe into 40, maybe 50. Yeah, you're going to take some losses, but over time, look long-term trading. Don't just think to trade a 5-minute candle and that's it, trading is over. Think about your plan going into the future. If you continue to trade like this, over a month, 3 months, 6 months, 1 year, 2 years, 5 years, you might be living a completely different life and you might be financially free by respecting 0.5%, 1% per day, and being happy with it. Don't be negative. I can't stand it when I see traders say, Ron, I only got 1% today. If I said that when I was younger, oh my goodness, you only got 1% today. Now, what's happening? Is any volume closing above 618? No. So we're in this consolidated box. And again, it's forming a pattern now in the box. So what pattern do we see? What could happen up here? It came up, rejected it right there. They pinned it. We can clearly see where they pinned it right there. And it came down. We're holding this green zone. It's coming right back up. Okay? So it may come up, back up to that red box, or low high at the 618. Let's give it the benefit of the doubt. It's going to come back up to here. That could be potentially a double top forming up there. And maybe it comes back down, and that's our neckline to break. If it can break down there, maybe retest and then push, that could be a possible selling opportunity in the market for gold to continue with this upper time frame selling pressure. But we still have to respect what these buyers are doing. It came down right here, higher low, right into this green box, and look at the candle, opened, ignited, green, strong, continuing to come right back up. So we have to give respect to the buyers. They're still holding this entire uptrend. All we got to do now is maybe close with more volume above this 618 in order to push to 1900. Yeah, Carlos, I love that. Like a bank will give you 1% interest on your money in a month. Yeah, they'll take your money. You give a bank $100,000 and they're going to give you, well, right now, Carlos, the interest rates are a little higher, but traditionally, yeah, it's about 1% in a savings account. And in an entire month, guys, the banks, okay, if you gave them, let's say, for example, $100,000, they'll give you 1% in savings, okay, in an entire month. And if you're getting 1% per day trading the markets, you're doing really well. Okay, so you got to look at the positives. Yeah, sorry guys, I took forever with gold here, but I kind of wanted to make today's my last day. I'm in vacation mode right now, guys. I'm sorry, but I'm going to Jamaica later this evening, so I wanted to make this more of an education. We're going to have a webinar later. I want to kind of do like trading plan, like a playbook to get you guys until I come back. But I really want you guys to understand this, okay? What's going on? Like, make sure you learn, okay? I know we can trade and making pips and things like that, but this is important stuff. Now, look at where the body closed, okay? So we got the first body of volume to close above this 618. Now, can the buyers do something with this now? They have the momentum. nice bullish engulfing candle, close above 618. It opened. Look at how small the wick is. Again, okay, common sense here. Look at where we closed, right near the high. How did this candle not open and take out that little 1 pip wick? How? Tell me. Okay, is this natural? Probably not. Okay, so this is where the markets are manipulated by bots and things like that, where they open it. How, after all of this volume in this bar that closed right near that high with that little short wick, this candle opened green and could not just take out that. Okay, that's very suspicious. Okay, so when it opened, now we have to go through the motions. Red, 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 coming back down to this green block. This was over here. Okay, so see how we can look at price action in the past and how it will react in the future. So right now we're trading right into that. We caught the bids. It's coming right back up now. Okay, but we have this large head of this red volume. This is a hanging man candle. Lots of time left on this, 3 minutes and 30 seconds, but it opened up very bearish. So again, if it can flip this and push, high probability is we're going to take out this high and drive maybe through this red zone and into 1900 and catch that liquidity up there. So it's still holding, technically. That is a big candle that pushed down. It's scary, but it's still holding this block. It's a higher low from this bullish ignited candle, and it's higher lows from over here. Gerardo, that's great, bro. You're done for today before you give back your gains. That's amazing. Good for you. Just learn that, guys. And don't feel like you're doing something wrong. I always feel like it feels like you guys are doing something wrong, that you guys are done trading when you hit your goals, or you've got some don't feel bad about it, guys. You should feel happy. It should be like you went to work, you did your work, you got paid, and now you go home and you see your family and you go do your other things. I don't know why traders see like negative when they hit goals, or they feel bad leaving the market. Who gives a shit, guys? These markets are going to be here 24 hours a day, okay? The markets are going nowhere. Whether you're in the markets or not, the markets are still moving. You know, when you leave, gold is still going to be moving up and down and sideways, okay? But look at what you did. You came in, you got some money out of the markets, now go on with your day. The market, if you still stay in the markets, then you might give back. That's the worst feeling, okay? Giving back your gains. It's not just for the money, guys, okay? We've all been there. Everybody here has made money. We've all lost money. Okay, let's get over the money part. It's the psychology that destroys you. If you're trading all day, let's say for example for 3-4 hours, and you're up 1%, okay? And you continue to trade where you should have walked out of the market, and now you give back that 1%. It's not that you gave back the money. It's now, what do you do when you're at break even? Will you walk away from the market at break even? 99.9%, I bet you're not. You're going to continue to trade because now that human psychology takes over. You were up money, now you're back to break even. What do you got to do now? Now you want to get back to that 1%. And some traders can get back to that 1%, and then they don't walk away for the second time. And then they want to continue to trade because now, I'm thinking I'm gonna make 2%. And then if you give that back, then you're gonna be really mad, and then you're gonna maybe revenge trade. And then before you know it, you're down 2% for that entire day. And now the day is over. The trading day is over. Now you got to live with that. You got to look at yourself. And then that might affect the way how you trade tomorrow. It might affect the way how you trade next week. And now you're causing self-destruction is what you're doing. Okay? And that's where traders implode, and that's where a lot of struggles happen. I went through all of this stuff in my younger years, and it took me years to understand how important that was. Not for the money, okay? I know a lot of us, a lot of you guys are not worried about the money when you trade, okay? But learn good habits in these markets, guys. Be disciplined. You know, when we say that word discipline, we don't just say that word because everybody is saying you need to be a patient and disciplined trader. I can go on YouTube or TikTok and find millions of channels that say in order to make money in these markets, you got to be patient and disciplined. Yes, okay, we all understand patience and discipline, but how do we put it into effect? How? Okay, everyone can be disciplined and wait for a trade and get pips and be patient, patience is waiting for a trade to develop. The discipline is to learn how to get out of the markets, whether you're profitable, okay, or you've hit your daily stop loss for the day. So for example, not every single day is going to be an amazing day where you get 1% every day. Some days you might lose 1%, but you have to have the discipline to get out of the market even when you lose 1%, because your analysis is not agreeing with the market. The market is above you currently today. Okay, so don't compound it and make it worse. Maybe just step away for 30 minutes. Okay, be disciplined to just walk away. Go catch your breath. Go get something to eat. Maybe review the trades that you just took. That's discipline. Take the time to review the trades that you just took, and maybe you're going to see, okay, maybe I should not have bought this candle. It was breaking out at the 618. It was developing where it was getting overbought up here. It was coming into a prior resistance. So maybe I should not have taken that candle, but review it. And then maybe you're going to trade stronger going forward. Okay. All of you guys are amazing traders here. Okay. Everybody is great traders. It's just some traders have learned to be more disciplined with risk management over the others. Okay, there's a lot of really, really good traders here who understand chart patterns and understand price action, but what they're lacking is the discipline and maybe control in the markets or risk. They're risking too much. When they see a play develop, yeah, it could be an M top and you're looking to short this neckline, but when you do it, you're going too big of a lot size. And what could happen is you're going too big, too hard right away. Yes, it sells, but then all of a sudden it comes back up with a wick and does something like this. Then you get stopped out. Yeah, you read a double top breaking the neckline, but you over leveraged the sell and you sold into a block of bids where there was just a natural retracement coming back up, and then you got stopped out and you over leveraged your account and you took a massive loss. You were in control of that, not the market. Why did you do that? Why did you go so hard and risk so much on a potential break here, but you're selling into a ton of bids? Okay, maybe that was my problem too. So what I learned was trade a little smaller, take that trade if you like it, but go smaller and feel it out. Because if it comes down and goes back up and you get stopped out, okay, you lost a tiny fraction of your account and you made a mistake on that impulse move, or you got to wait for it to develop more with more selling volume to come down. But then if it starts to move in your direction, then you can start to add another size in the market. Okay, you got to learn also how to position sizes, how to position a smaller trade to see how things are moving, as opposed to one huge one right away. Okay, it's just feeling out the market. Again, if you're in boxing, the boxers don't just get in the ring and just start throwing their hands around and just hope that they connect.